live. All right, we good. Hey, what's going on? Beast Mode Brandon back again. Happy Tuesday. Hopefully you guys were able to extract some money in the markets today. Today was Money Tuesday in the group. We had a good time, right? For some of you that is just your first time on my specific call, or you did just join the mastermind, congratulations. Happy to have you here. I want to share a very powerful technique that we do use inside the mastermind that I think everybody is crazy if they don't utilize it to their advantage, right? But with anything, there is risk. So we're going to talk a little bit about risk management aspect, how to structure stuff out. One of my favorite techniques, trying to find these and then how we could find some of these. But you have to do me a favor and you got to bring this information back to the chats. And when you find something setting up, we want to know about it. We want you to post in the chats or keep an eye on this, because if I'm here by myself, I can give us fire alerts. But if I could teach you what I'm looking at going through my mind, then we instead of having just me, we now have an army. And when an army's marching, we're all in one accord. There's plenty of opportunities for us to do this any single month. Everybody right now is getting wrecked. They call it Wrecktember. But guess what? We still winning. You know what I'm saying? So hey, happy to have you guys here. Another thing, I do live trade every single day, Monday through Friday. That we do have a full live market. For you that don't know, yes, you can come in if you're in the mastermind. If you're not in the mastermind or you're on a beta or the light, just shoot me a message. We can get you squared away, get you joined in, and we tell you welcome to the dark side or welcome to the green side. You know what I mean? So anyway, let me get through my part, what I got to do, and then if there's any specific questions that you guys may have, I'm going to turn it over to you guys and give you guys an opportunity to ask some of these questions. All right, so let's get ready to rock and roll. Let me share my screen. And you guys should see my screen right now. What you guys see the coloring book? Just give me a 1 in the box if you see the coloring book. Make sure I'm on the right screen.
Coloring
book. My
book.
Thinkorswim chart, like it's all the colorful thing.
Mm-hmm.
Is that what you see? Awesome.
Yep.
All right, we got 1s in the box. Awesome, awesome, awesome. All right, so what we're going to do here is we got the background here. Let's get the coloring book. Let's do lecture, and we're gonna rock and roll. Can we see that? Yes, we can see that. All right, so one of my favorite techniques inside the mastermind is a trade option technique that we call the leaps, right? A couple of different rules that we have for these leaps going into the trades. Rule number 1 is going to, I'm gonna put a star. We want 6 to 9 months of expiration plus, right? Rule number 2, I'm going to change this color actually. I'm going to go to orange. Rule number 2, we have, is that better to see? Yeah, we can see that, I guess. Let me see the purple. Yeah, we'll do the pink. All right, rule number 2, we want our bid and ask to be less than 20%, just like anything that we have, right? So I'll put a star number 2, bid plus ask less than 20%, right? And if you guys don't know that, please go back and see another recording, because we all went over that stuff, right? Everybody should know that. And if you don't know it, just ask me a question as soon as I'm done. Another thing, we want our open interest to be greater than 100. That ensures we all can get out of the trade properly at the same time. Another rule that we have is we want to see our delta. I'm going to put D equals 19 cents and higher. 19 cents and higher, right? We all have different account sizes, so we all could take part in this together, but we all don't have the same account size. So we need to protect our account, right? The last little thing that you need to understand your stop loss. Where's your stop loss? I do a time-based stop loss. You can do equals, you can do market structure, or you can do time, right? So if you didn't know this, right, every single month inside the mastermind report, I do give you guys stocks each and every single month. Last year, we did not lose a single trade on the leap side. Downfall is we only get 1 to 3 leaps a month, right? Because you get quality over quantity on the leap aspect. Super safe, but the reward's there. Secondly, this year we've won every single leap except one, and that was Beto in April, and it just simply didn't play out right. So what we like to do is we like to give our leaps 3 months of expiration time. The reason why is we like to protect ourselves with the risk management aspect, right? We give ourselves 3 months of time because if our stock does not play out in 3 months of time or sooner, I'm not willing to take a full 100% loss on my position. I'll take a 30%, I'll take a 50%, I'll take a 70%, but I'm not taking a full 100% loss, right? Second thing, if you use market structure, you simply just want to cut that trade when the trade does not go in your favor. So what I mean by that is I'm just going to pull up this chart right here, make it a little bit larger, right? What we like to do here is we like to take a trade. We have something down here that we've been working on. It's our momentum. What we're looking to do is this kind of gives us the heads up, and then once we have red, we're looking to take the buy. Once we have the green, we're looking to take the short, right? But we're waiting for the confirmation. Then you want to use the alligator to give you that confirmation, right? We are working on this. What we do like is we like to wait for an arrow to populate on this specific chart, right? So what I mean by market structure, and that's where I'm going, is if we would take this call right here, which we did call out with that reversal arrow, this right here will be our stop loss. You see that market structure line? We came down, made a low, we started coming back up. So if we would take this trade and we did market structure, then if it broke this to the downside, we'd cut the trade. Does everybody understand that a market structure stop? Just put a 2 in the box right now if you understand that. That's one stop loss technique. Let me see a 2 in the box if you guys understand market structure. If not, just put a 1 in the box if you don't understand it. Then I can just touch base on it. That's totally fine. The other technique is I give it a time base. So if I enter this if I understand this or I enter this in May, June, and July, that's 90 days. So if I entered it right here and my exit plan would be right there, if I never got the expansion, which in this case we did, then I would still hold it and then I would cut it right there. So we do have someone that don't know what the market structure is. A couple people, that's totally fine. Simply what I mean by that is you got 3 phases in the market. You have an uptrend, right? You have a high, a higher high, higher high. You have a low, higher low, higher low, right? And this is our last low. If this gets taken out, this would be our market structure low at that point. So if we take what we just learned right there and look at structure, what I see is I see a push up, a reset, a push up. This would be my market structure low. If you have trouble gauging this is why I created this tool. It tells us exactly where the structure low is and the structure high is, right? So now you come up here, we come back down, you come up. All it is, in a real simple term, is zigzags based off price action itself, and that's it. That's market structure right there. Now use it, put a 2 in the box. Now you have a little better understanding, just simply what we're talking about from the market structure. Put a 1 in the box if you get it now. If you don't, hey, just keep your 2 in the box, and I'll try to break it down a little bit better. If you don't get it, trying to be quick, you know what I mean, so we can get into this a little bit deeper. Okay, now and that's fine. You know, that's just what we were talking about, right? So that's our exit plans for the leaps. Right? Let me get rid of this chart. Now the next phase of this is our risk management. Right? Why is this crucial? Well, let's just tell you this. Say you have 2 traders. You have trader A and you have trader B. We each have 2K accounts, right? Trader A and trader B. Trader A puts all 2K in one trade, doesn't set stop losses, wins the first trade and makes 50%. So now his 2K is at 3K. Oh my goodness, I just grown my account. Look at that. Trader B takes the same trade, except he doesn't use all 2K. He puts $400 into his trade, and he makes 50%. So now his account is up $2,200. Right? Of course, everybody wants to be trader A right now. Then the next trade that you take, right? You're going to risk all 3K, and let's say you lose 80% of it. Now, guess what? You have a $600 account. This trader over here that risks $400, he's going to take a loss where stop losses is set in place, and his $2,200 might be at $2,100. Then the next 6 or 7 trades, let's say he makes $200. Well, he goes on such a win streak. Now it's $2,100, it's $3,200. But trader B, right? Trader B took a whole month to make $1,200, but is trader B net profitable? Absolutely. Trader B understands risk management. Trader A is a gambler. You don't want to be you don't want to be that, right? If you're trader A, put an A in the box. If you want to be trader B, give me a trader B in the box. And that is very crucial, right? In trading in general in itself. Not just taking the leap trades, right? And that not just swing trades, that's also day trade as well. So let me erase all this, right? I tell people this too. It goes right in sync with the weekly hit list. B, but I learned the hard way. We all should be putting B's in the box. We all learned the hard way. I struggled for 3 years. That's why I can teach this religiously, because my loss is your gain. I didn't do this. Another example of risk management. 1, 2, 3, 4, right? You got 4 weeks in a month. We have our weekly hit list. Our average winner on our weekly hit list, we'll say, is 25%, right? And sometimes we get blessed with 50. Sometimes we get blessed with 100. Sometimes it's all good. First week, we made 25%. Second week, we lost 50, right? Trader A is quitting because now he's down negative 25%. Trader B is down negative 25%, but he trades week 3 and week 4. You might get blessed with the 100 here. You might get blessed with the 50 there. So 50, that negative 50 takes that out. Trader B now is up 125% over the month. Trader A, that put all his money into this trade right here, that we should have lost 50%, he lost all 80 or 90 or 100%. Now he's fearful to take a trade. Guess what? He doesn't give himself the advantage to be in the markets to be up that 125%. That is why risk management is crucial. Does everybody understand risk management, why it's crucial? Put a 1 in the box right now. Put a 1 in the box right now. So that's the, I see 1s in the box. Awesome, awesome. I appreciate it. That is the Cliff Note version of why I think leaps are important, why I like the leaps. We basically do all the work for you, but now I'm going to show you how you can do some of the work, because remember, you promised me you're going to do some of the work. Let me find the chart I want. I might have deleted it. It was on this one. Let me restore cells. I think this one is the one I want. Maximize cell. Yep, this is the one I want. All right, so right here, we have our alligator on the chart, right? Something that we all get. When we're trying to find a leap, this is a great tool to put you into a position. All right. Someone give me, like, and where do you start? Does anybody know where you start to even find a leap? Does anybody want to come on the mic real quick and say, where do we start to even find a leap?
So looking at the chart, Brandon.
Yeah.
That the one right here where it's getting ready to take the dip here, you would take the leap if you oh, okay. So I'm in the wrong place. Okay. So because I was up top. I'm sorry.
Where at?
Up here where let me see, because it's hard for me to see. I'm where it says 150. I ain't sure. A little bit.
That's all good. It was a trick question, right? We're just looking at a chart. So what would give you the indication of why to even trade this chart? I don't have any indication. I was just curious if you do.
Oh, okay. All right.
Follow me? I don't. Do
I
you?
got you.
Now we don't, because remember, we like to take the highest probabilities, right?
Well, I will say too, I don't even use this. I use that the mobile, the one like on my iPad, that mobile one. So I ain't even familiar with this. Is this the desktop
Just the
version?
desktop. Yep, yep.
Okay, yeah.
All right, so look here. In the report, right? I was just throwing you a trick question out there, just having some fun. In the report, you see right here, if you scroll down, you got the beast mode section of the report. These leap trades right here. I do all the work for you if you do not want to do anything yourself. If you take these trades right here every single month, you can just wait for these, and it'll give you a good position to get into the trade, a high probability, I should say. So if we now look at this same chart and we look at AAPL, right? Apple. Let me make sure we're looking at the correct report. This is August. That is not the correct one. Where's my new report at? I need the September one. All right, so this was August, right? We'll look at Apple in August. So if we come back here and we look at Apple in August, right? Check out what happened right here. What happened in August? Did Apple push up or did it push down? See how it pushed up? That's a high probability trade, right? Everybody agree? Now you come over here to Walmart. Now remember, this was the August report, right? WMT. This was the August report. Let me ask you this. 1st of August, right here, what happened to Walmart? Did we push up or did we push down? Do you think everybody that took leap trades in August off the report was happy? Put a DCG in the box if you think they're happy. Put a DCG in the box if you think they're happy. Everybody should put a DCG in the box. All right, I see a couple of them. So going forward, how can we all work together to find more of these trades, right? So there's 2 different techniques that I'm going to share with you. One of them is the moving average bounce technique, right? And what I mean by that is I wait for it to retrace and get down to the 50, the 200, the 800, whatever one you like to use, right? The moving average bounce technique. What that does is if you look at this, right, and you're looking for price to break up, come back down, and what do we have right here? We have that reversal arrow right there on the average, and price pushes to the upside. This right here is a textbook moving average bounce. So if you see the moving averages like this, and you see price pushes up, comes back down, and you see it start bouncing or react up this way, I'm looking to take a leap trade. That's a little bit more, you got to be a little bit more dialed into the chart. So like right here, price comes down, we bounce in the averages of the gator. I would love to take my trade right there or right here for my leap trade, right? That's one style to get you into the trades. A little bit more advanced, but you got to look at it, right? Over here, why did I call this? Because guess what happened? Price came down right here. Price came down. It started breaking up, come down, and we called it right here, right before earnings. And obviously, we got blessed with the earnings beat. But from the probability standpoint, that's something that is looking good. Even if you took this trade over here, you came down and you bounced right there, I wouldn't have taken it because we don't have a reversal arrow, right? So I like the reversal arrows on the moving averages. Give me that confirmation, right? And I got something that I could show you that makes this a lot more simplified, right? I've been in the lab working on it, and I believe I could show you right here. So same thing. If we look at someone give a random symbol. Remus, give me a stock. What are you gonna look at?
I like Google.
Me too. All right, that's a good one. Googl. I like Google with an L. All right, so what do we have here? This right here is what I'm talking about. Does everybody see these arrows right here? Everybody see these arrows? I wait for price to come down to this baseline or right here. Here's a trade I would take, right? And this is why I make things simplified. Price pushed up. We came back down. We got this reversal. I'll take a trade here. I'll take a trade here. And then this would be my stop out right there. And look what happens. You position yourself for a leap trade with a real tight stop, and that floats on up. Right here's another trade. We come down. We reversal arrow up. I take the buy here. A couple days, I could be risk-free, right? When I take trades, I trade for profitability and consistency, right? And even on this trade, if I would take this, where's the market structure at that we talked about? Well, if we made a low right there and pushed up, this would be my line in the sand for my stop out for my leap trade. All right? Market structure, making everything full circle. Over here, same thing. What do we have? We pushed up. We come back down. We got a reversal arrow. I'm taking this. This would be my stop out right here. We never come down and break that area. We come up, we come back down, we come up, we come back down. This is why time plays an important factor. All right, look, I'm looking at a 1 minute chart. Wow. I should be looking at the day chart. I was like, man.
I was just about to ask you what time frame are you looking at?
I meant to be looking at the day chart. I'm like, man, Why do we get this many trades and I've missed them all?
Who
You know
was
what I mean?
that?
Yeah, I mean, and it shows you this works on the smaller time frames too. All right, so this is what I'm talking about right here. This is a daily candle time frame chart, right? The same exact logic. Remember, we get paid to be patient. Price comes down. You see right here how it's reacting at this area, and then we get this coil like the pop. You're either going to get a drop or you're going to get a pop, right? We got this reversal arrow. I'm taking the call here. Right there's my stop out, right? And check it out. Does price push up to the upside or to the downside? Yup. Same thing right here. Price pushes up, comes back down. We come up, come back down. We are stuck right here at this moving average or this order flow. And check out what happens. I'm taking this buy right there, and I'm putting my stop out right here. This requires a little bit more work for you to take the trade if you like to be more active. Right here's another textbook moving average bounce. We come down, we pop right there. Remember that pattern we were drawing on the zigzags? We break out, we come down, we start hooking. We want to take our buy here. There's our stop. Price resets, we start hooking up. We want to take our buy here. There's our stop. We'll check out what we have right here. Price goes up, comes back down. Here's an entry. Price goes up, comes back down. There's that hook. Price goes up, comes back down. There's that hook. Price goes up, comes back down. There's that hook. Stop out. Price goes up, comes back down. There's that hook. Price goes up. Everybody follow me. Put a 1 in the box right now. That's the harder way to get into the trade. If you don't have this custom tool, we are going to do a masterclass on this. We were dialing it in. Me, Mike, and Jamar put a lot of money, a lot of time into this, and it works on the downside too. Check it out. Price comes up right here, comes down. Here's my entry. There's your stop out. Moving average bounce to the downside. And the candles are all red because our trend is more likely to be going to the downside. Here, our candles are green. Same thing. We get that moving average bounce. There's an entry. Moving average bounce, entry, stop loss. Moving average bounce, entry, stop loss. Here, I'm not taking it because we need to come down here to this level, give me a bounce, and then give me an arrow. Everybody follow me. That's the hard. That's route number 1, right? Route number 2, you can come here into the Discord, right? And we went over this before. We did a masterclass on this as well, but I brought it back up right here. Route number 2 is this right here. I can type in, and Troy's already playing with it, jumping the gun. Troy's very good at that, but that's why he's a go-getter. You know what I mean? I put this thing in for Amazon. He put UNH, right? What's the month right now? Let's pull up UNH because Troy did this one. So check it out, right? This gives you the seasonality based off of the average probability of what it's going to do in that month. So what's the month right now? September, right? This right here is your line, right? Your median line, where if it's above it, that's a green month, green month, green month, green month. This is a red one, red one, red one. September, what happens to UNH typically? Over a 20-year time period, what happens to UNH? Does it go down or does it go up?
Goes down.
Goes down. How do you know that?
It's below the line.
It's below the line. All right. What happens in October?
It goes up.
What happens in October, November, December?
It goes up.
Now let me ask you this. If you just said this out loud for everybody else, in September we see it's pushing down, would you, from a probability standpoint, look to get a position in September to sell out in October, November, December? Or are you looking to get it in October, November, December?
Well, I'm gonna take it while it's low.
You're darn right, because we want to get things on sale. You follow me? So now let's pull UNH up on the charts. UNH, right? UNH, historically, we're near the highs. We should retrace a little bit, right? If I go back to the chart over here, make things easier as well. UNH, let me see what we have here. Our last arrow was a red one. Well, guess what? I'm going to sit patiently. If let's say this was all of September, I would take my buy here to be positioned, and I would take my buy here to be positioned. And sometimes we're going to be too early, But this right here will be my hard line stop in the sand. This right here will be my second hard stop line in the sand. You mean to tell me that this thing went from 575 and went to 610? Yeah, it did. And on an options trade, that's 50 to 100% ROI return, if not more. Does everybody see that?
Yeah.
You see how easy trading can be when we work together and you use the tools that we have collectively together, but you only get these tools if you're in the mastermind. You know what I'm saying? If you're on the light package or on the beta, you don't get that. All right, now check it out. What do we just learn for MU? All right, check it out. In my Google Calendar, I see June, July, August, September is a horrible month. October, November, they're good months. We're now in September. I would take my probability and come here to my chart and say, well, let's look at MU. And what do you think should happen? If we get right here, if you got this buy, and you put your stop out right there, you just got stopped out. Okay. But if we're in a strong month, I will take this buy. There's my stop out, and price pushes up. The problem is the trend is still down overall, but you're trying to position yourself at a cheaper price. So, like, for instance, something on this day, August 9th, right? It's now a month later. You can look at a leap trade on this, right? And it's another thing how you can back test and give you. Does anybody have an idea what this move would have given you on a stock option trade, a leap trade? It went from $92 up here to 110. That's about $18 on this specific move, right? Put it in the chat what you think it went. Do you think it went 20%, 5%, 50%? Anybody know? You can put a guess in the box. I won't put you in timeout. Torian says 200%. Who else we got? 70%. All right, well, guess what? There's a way that I could accurately determine what this specific stock did. At the time, our trade was at $92. It's pretty close to it right now at 86. So we go to the option chain, right? Come over here to trade. We look at MU, and we're going out 6 to 9 months or greater. If there's an average of 30 days in a month and you times it by 6, 30, 60, 90, 30, 60, 90, that's 180. So you come down here to 180, I see 192. That's where we start to take our leap trade. Remember the rules that we said before? We want our bid and ask to be a certain, we want our open interest, our delta. This is what I'm talking about right here. So we're going to bring it in full circle again. If you take your bid and you divide it into your ask, that's how you get your spread. The reason we say this is a super liquid stock. The spreads are tight. We don't have to worry about that, right? Now, let me ask you this, right? If we market order into this trade for $1,300 and $13.45, and we sell out right away, and our contracts are now worth $12.25, where am I getting that? Well, if the ask is $13.45 and we market into the trade, and we get sold out on the ask right here for $12.25, we just lost $130, give or take about 5 or 6% ROI. That's not that big of a deal. Everybody agree? But when you look at a stock like BKNG, right? And I did all this before. You look at something just like this. If you look at something just like this, oh man, what did I just do? All right, we'll just leave it there. If you look at something just like this right here, let me pull this down. Check this out. If we bought in for $1,900 and we sold out right away, our $1,900 turns into $1,080. That's about a 50 or 45% spread. Does everybody see that? Absolutely. Right? Absolutely. Let me see. I guess we just put this on volume. All right, we'll just do that. So let's go back to, we're looking at MU on the leap side. That's why this is important, right? The second thing that we talked about was our open interest. We went 100 or more. These are all in the hundreds and thousands. The reason why, if you take a trade with 100 or less open interest, there might be a problem exiting the trade because there's not much volume allowing you to exit the trade. don't let that bother you, right? Don't even do it because once again, my loss is your gain, right? The last thing, since we all have different account sizes, your delta. Not everybody has $1,300 to take an active money contract. Remember, we can go all the way down here to find 19 to 20 cents. We all should be able to afford a $300 contract. Now, this is a leap trade, so it's super, super safe, right? But we all should be able to afford a $300 contract, right? See the difference? You might have me and Ramos buy $1,300 contracts. You might have Michael and Gretchen take $300 contracts. We can all still make money. So now, going back to the chart, right? Going back to the chart. If this was at $92, right, and we're right here, we can see what we will kind of pay. So we can see that there's 155. Let's see, right here, 20. So what we could actually do is we could actually right-click this, right-click this, and press copy right here. I'm gonna let it here for 3 seconds. 1 Mississippi, 2 Mississippi, 3 Mississippi, and we can copy this. What this is going to do, right? We come back to our chart, right? And what day was that? We would enter this trade on August 9th, right? What that can do is that shows us these are normal candlesticks of the share price. We can press this and press Control V, and we can enter the option price in and see exactly what it moved, right? So this is the option price. The 9th is right here. They're $356, right? $356. And they hit a high of $850. So 350 into 850, right? Let's see what it is. 350, 850 minus 350 is 550. 550 divided by 350 should be about 140%, 160%, 157%. So you mean to tell me, right? You mean to tell me with something that you bought 9 months of time, this right there is 150%. We're going to put our trail stop limit in if we up 25% or 50%. See what I'm talking about? You see how relaxed the leap trades are?
So let me ask a question though, Brandon.
Go ahead.
So say like when you because I always struggle with the amount to use for the trail stop. And I always seem to not give it enough. So when you're doing the leap, what type of trail stop should you put on it?
All right, that's a good question. So me and Mike made a trail stop template sheet we posted in the WhatsApp group to accurately prepare you what trail stop you can use. In a roundabout quick way, that's a universal question. You'll know why that is?
Uh-uh.
All right. So look right here. Say we buy a contract for 96 cents. We buy a contract for $445. We buy a contract for $1,500.
Mm-hmm.
There's no way that we can use the same trail stop for all three of them. You know why?
They're different price points. They're going to move it.
100% sure they're different price points. What happens is, my rule of thumb is this. If we're shooting for 25% ROI and you want to secure profits quickly, you can go in a 5 or 10% trail stop, right? If you have multiple contracts, you can trail all of them and let one ride risk-free at 25%. And that's going to give you the chance to get those Grand Slam and those runners. But if you shoot for the Grand Slam or runners every single time, then you're going to get stopped out at break even a lot. Like, you know what I'm saying? In my opinion.
Okay.
Because if you're doing 1,000% or nothing, you're going to see nothing more than 1,000%. You know what I mean?
Right. Okay.
But you're going to see 50 to 100% very, very frequently. So once again, are you in this to be consistently profitable, or are you in this to get that one-time Grand Slam a year? You know what I mean?
Right. Okay.
So now, get this: if we bought something at $1,500 and we're up, let's just say 20%. Real quick, we know that is 200 plus. That's about $300. So our 1,500 is about $1,800. If you go on a 5-cent trail stop, right, you're only giving it less than 1% as a trail stop. So you're probably going to have to go into like a $1.50 or $2 kind of trail stop.
Right.
You're giving it 10, 15%. Now, if you come down here and you're up 20% for $440, you're going to be up 60 cents a contract, right? So you can't go in a $1.50 trail stop, because if you do that trail stop and
You
it
at a
reverses
loss.
on you, you'll take a negative 60-cent loser on this. So for
Mhm.
this one, you might go in a 30-cent trail stop, right? And then if you
Mhm.
come all the way down here to $96 and it goes up 20%, you might only be up 20 cents a contract. There's no way you can even do a $1.50 trail stop. And if you go on a
Mhm.
30-cent trail stop, you're going to give all your profits back and take a 20, 30% loss. So
Right.
now this one, you might go in a 10-cent trail stop. Does that make
Okay.
sense?
Yep, makes sense. Okay. All right. Gotcha.
And that's why that's a universal question. So now we come back here to the Discord, right? Me, Jamar, Mike, we pay for all this. Well over $2,000 of tools in this Discord that we all should be using it a lot more than we do, right? So now we look at MU and we see September is a low month. What do you think I'm watching for a leap trade on September? What do you guys think? Anybody? MU. MU,
Mhm.
right? But now I'm not taking it just to take it, because I'm only taking it if we get a reversal arrow, because the probability of us pushing up over the next 30, 60, 90 days, the probability is good because we're almost halfway through September already. So if we come down here and start pushing up, I'm going to look to take my buy here. This will be my stop out. See this situation right here? I'm looking to do the same exact thing. Does everybody
Mhm.
see that?
Yeah.
And you come back here again, right? To the Discord. I put this sheet right here. All right. I put this sheet right here and expand it. You can copy and paste any single one of these tools and determine what you want to do. So you could do this right here. TR usual, and it tells you everything. List of top 10 orders where volume is unusually higher than the open interest. That's something that we'd want to know about. Here's another way to find some stocks to look into, right? Open up a can of worms. Copy this. No unusual data because the market's closed. So we can't use that right now. If we do, you come down here and you can look at all this if you want, right? Just a way for you to do it. You just copy and I just call them put chains for the day. So we can copy this. I think this one would be it right here. C, copy this, come down here, paste it. See what was cooking today. I'm not sure if it's going to work. Yep, it did. Hottest call chain. Now it's giving you a whole bunch of symbols to take a look at. All right. So now guess what? There's $2.1 million on Tesla. The This Friday's expiration at the 225 calls. Right. All right. There's Tesla. Why is Tesla being bought? Well, let me just take a peek at Tesla and copy and paste this, and let's just see what we do. TSLA. All right. What do we got right here? Well, we do know Tesla tends to get beaten up over these next 2 months. So it's a little bit too early for me to get into Tesla right now. But I do know on my radar, I want to keep an eye on this here in October, right? Because look what happens in November typically, right? Then you keep coming down here and you open up new cans of worms, right? Then you look at another one. Let's try to find something that how sectors are moving in the last days. You can do this right here. Copy. I think you're gonna have to put the number of days in. Pretty sure you're gonna have to put the date. Yeah. The default is 15. Um, so trade it is correct usage is TR previous days. So we're gonna say maybe 15 right here. The last 15 days. This tells me how much the sectors are up right here. So now, if we know energy and technology is getting beaten up, we can position ourselves and potentially catch some reversals, right? If we know real estate and consumers is up, I mean, at some point they're going to have to rotate, right? So if we look at technology like Google with an L, we'd be doing the same thing. So then I come down here and I look at Google with an L. What's the seasonality for Google with an L? Is this something that I want to put a lot of things in my favor? Right? Google, let's check it out. All right, what do we got right here? Is this historically a strong month for Google? Everybody see that? But the sectors are getting hammered right now. But what do you think is going to happen when money starts flowing back into these sectors? You think we're going to go up or down? Put it in the box. Exactly right. Nope, we're going to go up because if they're historically up over the last 20 years, we're just waiting for this sector to get warmed up. So now we come back here to Google with a Google with an L or G. What do you think I'm looking for? I'm looking for us to get this reversal arrow, this reversal arrow, this reversal arrow, but down here. And I would take my buy up here to these magnet lines. And that's how I get prepped and positioned to take the leap trades using the Discord as the tools and using other confirmation to get us into the trades. Does everybody follow me? Up, up, and away. So then if you struggle with this, right, what you can do is you can do real easy and do the same exact thing where you can come down here and if I restore my cells, we go back to this chart right here, right? All you can do is you can change your candles to where that styles. You can take it to the Heiken Ashi, and you do the same thing. You wait for us to get beaten down right here. Wait for us to get a reversal. That's a solid entry. This would be our stop out. And I have this made for TradingView. So if you guys really want it, I could bless you with it. But just let me know. I didn't publish it yet, but I do have it. All right, so that's how leap trading is meant to be simplified, and it's very easy, right? You guys think it's a little bit easier now? Put a 1 in the box. Yeah, let me get that. All right, awesome. All right, open it up for questions. What do you guys got? Anybody have any questions?
So I just want to make sure I'm clear, Brandon. So on the Google chart, the one that you have up right now. So if you you know it's going we okay. So when we looked at the seasonality, we know that Google is going to be going up in the last 3 months of the year. So based on that, we're purposely waiting for Google to go down to a certain level before we take the leap. Is that what we're doing, or?
Yeah, yes and no. So
Okay.
historically, Google is weaker this month, and we're already about halfway through the month, right?
Right.
So we know that the next 3 months are historically stronger. So at some point, money's going to get poured into this because stocks move up and down all the time,
Okay.
right? You follow me?
I do.
So what I do for my leaps is how I position myself. There's 2 ways that I like to take a leap. One of them is I'll use the Discord and use that tool that I just shown you and find
Right.
stocks that historically have a strong month coming up in front of us, right?
Okay.
And that puts it on the radar. Secondly, I need to have one of these reversal arrows for me to take the trade. One of
Okay.
these reversal arrows for me to take the trade. Now remember, this month right here is weak, and so is September. Everybody's buying calls, not me, because I know historically it's weaker. Why would I buy calls when I know history on our side to go to the downside, right?
Right.
So what I'm looking for is if we could drop down here and then push up, we could push up from here. We could push down a little bit more and get that reversal arrow. And then I would take that with confidence because my stop out is going to be the previous low.
So then, okay. So then when we're taking this trade, is it you necessarily looking at the timing? Or are you looking? So we about halfway through the month. You looking between halfway of the month to the end of the month to go in? Because I guess I'm asking the question because if we go in at the top of the month, we still know that the rest of the month could still be historically low.
All right, so let me ask you this: knowing that, do you think it's wise to go in at the top of the month?
I don't.
I wouldn't either. I would only
Okay,
wait until the back half of the month, knowing the next month is strong.
I got you. Okay, I'm making my
But now,
notes.
now hear me out. Hear me out.
Okay,
This may only play out 17 out of 20 years, right? Now
okay,
let me ask you this: 3 years in a row, if you took this buy right there, this was your stop, and it rolled back over and stopped you out, are you mad? Probably because you want to win trades. You follow me? But
right,
17 months or 17 years, you're going to get into a position where you enter it here and it pushes up enough for us to get 25 to 50% ROI. And to me, that's a winning trade. I'm done with it
right.
because there's
Okay,
always another trade. Every month, we have the PDF that we have stocks, right? And if you don't have it, just let us know. We have stocks in our PDF that historically are on our watch list. And why do you think we win so much when we create the report? Because we use all of our tools and smash it into a snowball, and that's like our crystal ball. You know what I mean?
I got you. Okay, I got
Yes.
you. So even
That's
though we do the leap, even if it don't do what it is we want to do, but like you said, but it pushed up enough, it's still a win, and then we're done with it from that point.
absolutely, and that's why I
Okay,
never go into a trade. I
okay,
never go into a trade with the set expectation where it's like I need 73% ROI. I'm looking to
got you.
go risk free at 25% in a leap trade.
Okay. So I think that's where I've always kind of struggled because because I'm a real estate investor, right? And so then I'll go in with a set amount of what I need to make. And so I think a lot of times I'm approaching the stocks that way. And so then when it don't, then I'm trying to force it, which I've learned the hard way. I can't force it. I can't make it do nothing. So
And we're
I
not.
struggled with that at one point, and what he said about doing a percentage base will help you versus a specific dollar amount every single time.
I
So
appreciate
just
that.
no matter what stock you do, if you just do a percentage and a consistent percentage and just stick with that, and if it goes blow past your percentage, hey, cool. But just do a percentage. Trust me, I've taken enough loss to know that. Just
right.
yeah.
Okay. Got you.
Yep. That's very well said, right? And that's one way to get in the leaps. The second way is to get our moving average balance, where we're looking to take a trade from here, we're looking to take a trade from here, we're looking to take a trade from here. You know what I'm
Okay.
saying? And we're looking
Right.
to take a trade from here. This way gives you a winner. You might get a loss here, but you get a win here. You get a win here. So you might make 100% over here, right? 50%.
Right.
You might only lose 30% here. Here, you might make 50%. Here, you might accidentally make 100. In the
Okay.
end, 1, 2, 3, 4, 5, you have an 80% win rate, but you are hecka profitable. And are we trading for the win rate, or are we trading to be hecka profitable?
Profitable.
Absolutely. So, and I tell people, don't be greedy because there's always another opportunity.
Gotcha.
Yep. You got anything else?
Are you entering on the daily time frame, or are you like what time frame are you actually like entering?
That's a great question. So the simple term or the simple answer is you can enter on the daily time frame. If you like to be a little bit more efficient, you could go down to like the 5 minute time frame and enter on a reversal arrow. So like that takes a little bit more watching the charts, but some people can only swing trade, they can't day trade. So I won't even worry about it and open up that can of worms. But let's just say we're watching our charts at nighttime and you knew that we saw this candle right here. So obviously the market closed, you're not gonna be able to take the trade, but you know the next day you're looking to take the trade. So the next day would be Friday the 23rd. So if we come down here and go to the 5 minute time frame and we go all the way to Friday the 23rd, right, which is right here, 22nd, 23rd, which is right here. I mean, you could almost pinpoint, that's the 26th, 23rd. You could almost pinpoint your entry based off a reversal arrow, and you could take your trade right here, and you might say, you know what? In one day at that low, you might get 25% right there taking this precise entry. You know what I mean?
Gotcha.
And sometimes that happens, and I'd recounter the question like this. Even though you got a leap trade or a swing trade, but in one day it giving you 40%, you're still going to hold it because you got 9 more months of time. I'm taking my profits and saying goodbye, and I'll re-enter again with the profits, and I'll be house free. Everybody got that? So can you talk about how to set the trailing stop, sell at the time you initially take the weekly strangle, and how would you determine a winning percent to go into a trail stop? All right, right here. Very easy. Let's just pull up a SPY. I'm actually in SPY right now. I got one contract left on each side. So let's just take my position, right? So now look here. I'm in a strangle trade. I'm in a call and I'm in a put, right? I'm in a call and I'm in a put. The second I take that trade, I right click this, Gretchen, right? Right click it and create closing order, and it sells the strangle together. So you can see it's paired together. You're not selling a call and a put. You're selling the options together. Are you following me, Gretchen? Give me a 1 in the box if you're following me right now. All right, she put a 1 in the box. So how you set the trail stop when you take the weekly strangles is you simply do this right here. Let's say we bought the trade at $3.50. Right off the gate, if I'm looking for 20 or 25% as a cushion, right, or the trail stop, I know $350 times 20 or we'll just say 20 because it's easy, is I know every 100 is $20. So 20, 40, 60, and half of 100 is 10. So that's 70 cents. So I would take $3.50 and I'd come over here and I'll go to trail stop limit. So the second I take the trade, I'm in a position. I come right up here and I right click and close it right away. Right? These are my lotto contract. So they still riding. I come down here to trail stop limit, and you take the price it is that you entered, $3.50, add the 70 cents. So it is now $3.50 plus 70 is $4.20, so 4.20. That's your trail stop limit, meaning when you enter this trade at $3.50 and your position is now worth $420 or $4.20, how much do you want to trail it by, Gretchen? Do you want to do 10 cents, 20 cents, 30 cents? Me, if I'm up 10 or 20% on this trade, I may go half of that or a little bit less than half of that. So if I know 70 cents is my net profit, I may say I'm going to go into a negative 30 trail stop. So I'm willing to give back 8% of that, right? And then I press confirm and send. And guess what? There's one more thing you got to do before you press confirm and send. You come over today and press GTC. This order will stay open until you cancel it or it triggers. Are you following me, Gretchen?
I'm following you. I'm just wondering if I don't get to the 20% profit, will it trigger?
It won't. It has to get to the 20% profit for it to trigger. Because that's where you're setting it at.
I was getting stuck. That's where I was getting stuck. Okay.
Yep, it has to get to that. It has to get to this limit order right here that you told it to trigger once that limit order gets hit. Now, if you're scared it won't go 20%, then go up 10%. I mean, it's totally up to you. Wherever you want to be consistently profitable at.
So
now,
for today, would that trail stop have triggered today at the time that you went in your trail stop? Because I couldn't close the trade, and then I was just wondering, had I set that trail stop ahead of time, would I have been good?
NVIDIA, I called out the trail stop, right?
Right.
And for every one contract, it was up $50 for 4 minutes today, right?
Right,
and,
right at opening, right after opening
yep,
bell.
If you would have put the trail stop limit in place, you would have got triggered out with a win.
So it did go, that was 20%, the initial?
Yeah. Yep. Yep.
Okay, thank you.
Yep. Does that make sense? Do you understand how to do that now for the strangle?
Yeah, I think so. I'm gonna play with it on the paper first, before
All
I do.
right. So I mean, walk you through it again.
Sure,
So
yeah, one more time would be great.
So we buy the strangle. We're in the strangle right now. The second you're in that strangle on Friday, you come right up here and you press right click, create closing order, and it's going to sell the strangle together. Right? Now you're selling the call and you're selling the put. If we bought it for $3.50, the same example, and let's just say you want to go up, let's say you want to go 10%. That's 35 cents higher. So you would actually take this SPY trade and you would change this from limit to trail stop limit, your day to GTC, and you put your limit price at, in this example, we're going 10%. So 350 times 10 is 35. So 350 plus 35 is 3.85. So now, with you going in a trail stop that soon, I would recommend going in a 10-cent trail. So then you're giving back about 4% ROI. So then you would come over here and press confirm and send, and that trade would not trigger until that limit price hits $3.85, and it's going to toss you in a 10-cent trail stop. Are you following me?
Yes, okay, that made sense. I followed that time.
Awesome. And that's how easy that is.
Okay, thank you.
Yep, good question though. So a call is minus and a put is plus for a trail stop. Nikki, when you buy an option, whether it's a call or a put, it's always going to be negative. But when you sell an option, when you buy it back, it'll be a positive trail stop. I don't know why it does that, but they're essentially the same thing. It's like this. It's like when you look at the call side, your delta is positive, but when you look at the put side, your delta is negative. It's exactly the same thing. It's just sharing. It's just showing you that you're making money as it declines, like the share price. You know what I mean? Not to confuse you. Yeah, not a problem.
Brandon, I have a quick question.
Hey, go ahead.
I noticed for the weekly hit list, I have a chart set up where I'm looking at them. Two of them hit already. I think it was TMO and McDonald's. So if nothing else hits this week, then next week we start a fresh week and we start all over.
Absolutely.
Okay.
Absolutely.
Thank you.
Yep, that's a good one. Was the NVIDIA call for the weekly play? Yeah, Mike. We called that on Friday. What indicator are you using, B? Torian, what do you mean? For TradingView?
Yeah, the one that has that cloud, like the one that has the cloud on the back and on the front.
Right here, this one?
Yeah.
That's the new Swingmaster Pro AI.
Ah, okay. Okay.
Yep. It's been a work in progress, but everything's dialed in and good to go now. So we're going to figure out how we're going to release it. You know what I'm saying?
All right. Yeah, I'll make sure I put my name on the list to get that.
All right, let's go.
Hey, B, I got a quick question. So let's say the market's getting ready to open up, and you go and you look at the pre-market, and the call you have is up $15, like that one this morning. Normally, can't you do your delta times how much the dollar amount has moved, so you can kind of know what it may open up as, the price range?
Absolutely. So 100%, you're right. I would say 90% you're right. The 10% that you are not right on is this right here. If you look at something like, let's look at NVIDIA since we're talking about it. And if you look at NVIDIA yesterday, you see how it closed here, but then it gapped up. When you get a gap like this, you're going to make more money because you're going to get something called IV height every gap you get, right? So like if you entered a trade right here with my cursor the next day, see how it gapped up? That right there is going to give you an incentive boost. So instead of like say you take your delta and your delta is 32 cents, you could say, well, the delta it went from 106 to 108. you'd be up about 65 cents on the call side. You might be up 85 cents or 90 because you got the IV hike, right? The second thing is it's hard to gauge it on the weekly income because you're always going to have a losing side. So you got to do double math. You know what I mean?
Okay. Yeah, I understand it. That makes sense. I was just trying to figure it out because sometimes what I do is if I check it pre-market and I see it's up a certain amount, I just go ahead and set a limit close. And if it hit it at, if it's up 200 and it hit, I take that.
Absolutely, that's a good one, bro. That is a real good one. That's a good one. That's exactly what I do, except I use the trail stop limits. You know what I mean?
Yeah, I got that, and that's something I've been working on because starting off on Robinhood, you don't have that option. So that's why I had never. Once I got fully over to Thinkorswim, I started working on the trail stop.
Absolutely. Absolutely. I love it. Hey, we got any other questions?
Yeah, one more with the trail stop again. I think we had talked about this before. So on a strangle, if you have let's say you set your predetermined trail stop to 15% with a 10% trail. If the market gaps up more than your trail stop, will it still honor what you have in the parameters?
Let's say, hold on a second. Ask that again.
So if you have let's say you have a 20% trail set, right?
Yep.
On a strangle.
Yeah.
And then the market gaps way up, like it gaps up like 80%.
Okay.
Does it still honor that 20% you put in there because now it's not registering that number on the
Oh,
chart?
absolutely, because you exceeded that. So it's going to put you in a trail stop the second the market opens up.
Oh, okay. Okay. So it'll just
Yep.
wait till the market opens up and okay.
Yep. So it can't do anything in pre-market because options are only traded during a live cash session. But if you put a 20% trail stop in and it opens up at 300%, the only problem is like your normal 10% trail stop, it'll put you in a 10% trail stop at 300%. So you're probably going to get kicked out right away because when it's up that much, your bid and ask gets a little bit wider. So, okay, bummer. You might make 280 or 290. You know what I mean?
Okay. Yeah, I get it. Thank you.
Yep. Good question. Hey, we got any other questions? All right. You guys do me a favor. If you think taking leap trades are easier now, give me a DCG in the box. You learned something tonight. Give me a DCG in the box. I appreciate it. I appreciate it. I appreciate it. All right. I see them starting to come in. You guys are rock stars. Remember, tomorrow we got live trading. Be there, be square. If you guys ever have any questions, comments, or concerns, never hesitate to reach out. And hey, let's get it. Do me a favor. You guys know what to do now. Bring it back to the Discord. If you have any questions, tag me. If I don't answer, tag me again. You will not offend me. You know what I mean? So,
Hey, Brandon.
what's up?
So because this is my first day. So the live trading do you do that via Zoom or something like? How do you usually do that?
Oh yeah, on Zoom. So the Zoom
Okay.
right now, at 9:30 a.m. Eastern time, I'm here.
Okay, got you. Okay, I'm
Yes,
with
sir.
you now. Okay.
Yep. You good? Awesome. Yep. Hey, have a blessed night. I'll see you guys tomorrow in the live stream. You also have a blessed one. Catch me on the next.